ARV, DTI, POF, Ginnie Mae, Fannie Mae, Freddie Mac. So many letters to learn. I just want to buy a house. Well, today we'll tackle one part of that alphabet soup, the FHA loan. We'll explain it and tell you how it could help you. I'm Carol Ann Reed with The Real Deal, where we give you the confidence and the clarity that you need to make the right real estate decisions for you. And today we are going to dissect the FHA loan and explain it. So an FHA loan, it comes from the Federal Housing Administration. And it's not really a loan, it's actually an insurance policy. A while back, the federal government decided that they wanted to help people who didn't quite have enough for a down payment or whose credit score wasn't all the greatest, wanted to help these people buy houses as well as everybody else. So they created the Federal Housing Administration, a department whose sole purpose is to guarantee housing loans for banks who would normally not lend to these people. They're going to them and saying, we will guarantee. So if these people bail out on their loan, we will make you whole. And while not every bank is FHA approved, here in the state of Minnesota, there are 590 banks. And in California, there is 3,039 approved banks. So there are lots of banks out there who can help you with this. And despite the common myth that this is for first-time home buyers only, that is not true. This is for anybody who qualifies. The most popular feature of this loan is probably the down payment, 3.5% if your credit score is 580 or higher. Now, if your credit score is 579 or lower, down to 500, you can still qualify for this loan. However, your down payment goes up to 10%. The interest rate is going to be as low and sometimes even lower than a conventional loan would be. And your debt to income ratio, which is the ratio between how much money you bring in on a monthly basis and how much your debts are, is 43%. Or in certain circumstances, you may be able to bump that up to 57%, but there's a lot of extra hoops to qualify for that. There is no income cap. However, there are loan limits. Now, the lowest loan limit right now for 2021 is $356,362, but that varies by county. My county just happens to be $402,500. But if you go to HUD.gov, HUD.gov, scroll down to the bottom to the buying a home section, that will get you started and get you to a place where you can check your county if you're interested. You can also scroll right down there and hit that like button. And they actually even have a special version of the FHA loan called an FHA 203K, specifically for rehabs. So if you want to buy an older house that needs some work, you can not only get your mortgage, but get your rehab expenses all rolled into one. There's some hoops that go along with that as well, but it certainly is worth checking out. Now, like everything in life, there are pros and cons. Some of the cons. One, the biggest one, is probably the mortgage insurance. It could be higher or lower than your conventional one, but for an FHA mortgage insurance, first of all, you are going to pay 1.75% of the loan amount upfront at closing. You can actually roll that into the loan, but you are going to pay that chunk up front. Then, in addition, you are going to pay monthly fees, monthly premiums as well for the life of the loan. They never go away. Unless you have put 10% or more down, then they will fall off after 11 years. There are separate property requirements. There will be a second appraisal. The bank will do a value appraisal of the house, but then FHA will come in and do an appraisal for health and safety standards. So it can't have peeling paint, it can't have broken windows, it can't have missing handrails on the stairs, just to name a few things. And it must be owner occupied. So if you wanted to buy it as a rental and rent it out, can't do that. However, you can buy properties with an FHA loan that are multi-unit properties. So you can buy a duplex and rent out the other side. You just have to live in one of those units. So what are some of the pros? Well, first of all, is that great low interest rate. Since the government has said, don't worry, if they default on this loan, we will back you and make you whole, they can afford to lower those interest rates. Not to mention that low down payment of 3.5%. And both your closing costs and your down payment funds can be gifted. You got to jump through some hoops. You got to have things like a letter from the person who's gifting you the money, but those are hoops that are easily jumped through. Just make sure you talk to your lender to find out what they are. And there's less of a waiting time after derogatory credit events like bankruptcy. You only have to wait 0 to 3 years depending on what kind of bankruptcy you had. Foreclosure, you only have to wait 3 years. And a short sale is somewhere between 0 and 3 years depending on the circumstances of the short sale. So there's one caveat to the whole FHA loans in 2021. Banks are allowed to add their own rules on top of the FHA rules. They're called overlays, and they are allowed to do that, and they don't do that very often. But today, 2021, in this age of coronavirus, they have done just that to make sure that they stay safe in terms of people defaulting, with people losing their jobs or their income being cut in half or whatever the case may be. They have added some overlays. They have upped credit scores to 620 in some cases. They have denied using rental income from a duplex or multi-unit property as income to qualify as well. But not every bank is doing that. And as we begin in 2021, as we get further down the road and come out of this coronavirus cloud, they will start taking those overlays off. As the free market kicks in, they will take those overlays off because they will want to be able to get more customers. Now that you know all about FHA loans and you want to know how they stack up against a conventional loan, go ahead and click right here. Thank you guys for watching, and I'll see you next time.